Hello and welcome to the day ahead. It is Wednesday, May 4th. I'm Andrew Gagan. Let's take a look at the session overnight. Wall Street ending higher after a volatile session ahead of the Fed decision tomorrow. Investors snapping up beaten down financials and tech names, with 9 of the 11 S&P sectors higher. The spotlight, of course, is on FOMC Chair Jerome Powell's press conference tomorrow after the US Central Bank's two-day policy meeting, with any comments on future rate moves and the road to production of the mammoth balance sheet. Markets are pricing in a 99.9% chance of a 50 basis point hike, which would mark the largest increase since May 2000. Stocks specifically, Estee Lauder shares sinking after COVID lockdowns in China and the ongoing conflict in Ukraine dented its sales outlook, forcing it to cut full-year profit forecasts. And Tesla chief executive Elon Musk again making waves with reports he plans to take Twitter public after taking it private, staging an IPO in as little as 3 years after buying it, should he be successful. To the bigger picture, US long-term Treasury yields fell ahead of the Fed Reserve meeting tomorrow. The US 10-year yield is just below 3%, but at the short end, the 2-year is up near 2.78%. And on the currency market, the US dollar falling against most major currencies as investors evaluate how much of the Fed Reserve's expected move to hike rates this week and beyond is already priced in. But investors are also questioning whether most of the Fed's hawkishness is already factored in and the dollar's bull run may be due for a pause. The Aussie dollar has been the best performer after the Reserve Bank surprised with a 25 basis point hike. And the euro is near its 5-year low, with concerns about inflation, growth and energy insecurity stemming from Russia's invasion of Ukraine, seeing it lose around 14% of its value against the dollar in the past 3 months. Meanwhile, Italian Prime Minister Mario Draghi urging the European Union to act on surging energy costs, saying structural solutions are needed. Economic data out of the States overnight revealed job vacancies rose more than expected in March. Factory orders were up more than 2% for the month. Well, locally, the share market is expected to snap this week's losing streak. SPI futures currently up around 0.6%. Elsewhere in the Asian session, it will be quiet with both China and Japan closed for a holiday. And in the commodities complex, global oil prices fell on the prospect of weaker demand from China, offsetting supply shortfalls in Europe as a result of an embargo on Russian crude. Brent crude down around 2.5% to $104 a barrel. And concerns over Chinese demand also weighed on iron ore futures, the price falling around 2% to $143 a tonne. Similarly, base metal prices were weaker, with aluminium falling close to 5%. And the gold futures price up 0.4% to $1,870 an ounce. In the crypto markets, the broader market initially found some support as risk appetite improved. However, that sentiment has turned in recent hours as investors await the Fed decision. Bitcoin falling below $38,000. Looking at the corporate calendar today, focus will be on the banks, with ANZ reporting a 4% rise in first half cash profits to more than $3 billion, benefiting from a pandemic-induced boom in home lending amid record low interest rates. It also says that it plans a restructure of its operations, which would see banking and non-banking groups separated. This as all 4 of the major lenders passed on in full yesterday's Reserve Bank rate hike. NAB, ANZ, Westpac and the Commonwealth Bank all raising home loan variable rates by 0.25% from this month to new and existing customers. That does it for the day ahead. See you again tomorrow.